All right, so let's dive right in. This is Remit Trade Limited. This training is organized by Remit Trade Academy, a subsidiary of Remit Trade Limited. My name is Paradise, and I'll be taking you through today's training. I want to assure you the very best of your time. You won't waste your time here. I'm going to ensure that you have the very best of the training tonight. And if you have questions that have been bothering you for a long time now, please bring them. I will answer them accordingly by the grace of God. So right here, I'm going to share my screen while I dive right into today's training. So as I share my screen here, I believe every one of us can see my screen right now. Can you guys see my screen? Can you just unmute and let me know?
You can see it.
Yes.
So tonight, I'm just going to go into not something very big. I'm going to go through the beginner stage of how to get started about cryptocurrency, how to trade, how to use certain indicator, and what you have to do for success. That is what we are going to be talking about tonight. So before I jump right into tonight's training, please, if you have not subscribed to our channel, Remit Trade, please do well to subscribe to the channel and always turn on the notification bell so that you receive updates from us every single day. We do updates here, like today I did an update on Bitcoin price and I think it is playing out as analyzed. So please don't miss out on any updates. Ensure you subscribe, turn the notification bell, and also leave a like for all our videos. We'll appreciate that very, very well. Thank you so much. All right, so let's move a little bit further into tonight's training. Today we are going to be using the Binance Exchange. So if you have not registered, the first step is that if you've not registered on any exchange, it must not be Binance. You do well to register, but if you want to use the Binance Exchange, the affiliate link is in the description of the video if you're watching on YouTube. And then if you are from the WhatsApp group as well, the link is in the WhatsApp group right away. So you can check that out and ensure you do your registration. Ensure you verify your account before depositing, because you will not be allowed to place a trade on Binance if you have not verified your account. Okay, so ensure you verify your account, and after verification, then you do your security settings, and that is all. Now, if you have challenge in your registration process, please contact any of the admin in the WhatsApp group who attend to you, or reach out to us via the Remit line. Remit line or Remit contact is in the description of this video as well if you are watching on YouTube. The first thing that comes to mind when it comes to trading is what is actually trading. When we say you want to trade, it means any activity where you give something to someone else for an exchange. That is what trading means. That's what trading means. That also means that in trading, you can buy and sell. If you buy and sell, you are doing trading. If you walk into your grocery store in your local area, you are doing trading. Okay, so the financial market is not an exception. Cryptocurrencies, stocks, bonds, forex pairs, and options, they are platforms in which you can perform trades. For cryptocurrency, you can perform trade based on the pair you want to use in trading. The same thing in forex. If you are using Euro USD or GBP USD or USD JPY, you can also trade even on options as well. So when you give something to someone in exchange for something else, that is what we call trading. And then spot trading. What spot trading means is that it refers to a direct purchase or sales of cryptocurrency or financial instruments. When you do that, you are doing spot trading. Look at it here. Let me go to my platform here. So this is the Binance platform. And I'm going to be very, very practical in all the section today. So you're going to follow me, and then if you don't understand anything, please write it down so that at the end, I will give you room to ask. What spot trading means that if, let's say, for example, when Bitcoin was here at this point, you decide to buy Bitcoin with the anticipation that Bitcoin is going to increase to the upside. That is spot trading. So when you buy at this point, Bitcoin increased to, let's say, $200,000. The movement from here to this place will give you a difference from this point to this area where the market is right now. That difference is your profit. That is spot trading. So it involves you buying Bitcoin directly with, in this case, BUSD. So when you do this, you are doing spot trading, and it happens on instant delivery on the specified spot dates. So the exchange to which this happens is called the spot exchange. The exchange to which you perform spot transaction is referred to the spot exchange. So Binance, on Binance here, if you come here, you see spots. This spot here means that you are on the spot exchange. That's what it means. So that also means that you can buy and sell any cryptocurrency that is listed on this platform on the instant delivery, on spot. That is direct purchasing. All right, so let's move a little bit further. Now, markets and market pairs. When we talk about markets and market pair, we are looking at something very unique in the cryptocurrency market and also in the financial market. Now, when we talk about a market, we are referring to where buyer and seller come together to trade a certain asset. That's what we're talking about. So the cryptocurrency market is not an exception. If you just look at your environment, you will see markets everywhere. Okay, like you must have a market very close to you or far away from you. But in that market, we see just two kind of people, buyer and seller. So when they come together like that, it forms a market. The cryptocurrency market is not an exception. So if you go right here to this area, and on this point, you see, here we have BUSD. If I click on BUSD at this point, this is BUSD market. Let's say click on this area right here. This BUSD market. This is this USDT market. This is BNB market, and this is BTC market. This is alts. Alt means alternative coin. Any coin that is not Bitcoin is called alternative coin. So you see under alternative coin here we have Ethereum, XRP, which is Ripple, Tron, Doge, and Polkadot. There's dots here. So these are all different markets on Binance. So when we talk about a market pair, we are talking about if we buy something, what are we paying with? And if we sell something, what are we getting in return? That's what a market pair means. So a market pair, in this case, let's say for example, a market pair BTC GBP, which is also the same thing as BTC ZAR. This ZAR here means South African Rand, or you can simply put BTC USD or BTC USDT or BTC ETH. These are all pairs, okay, under a market. Under a market, you know, when you go to the market to buy something, you are not going to buy everything in the market. You go to a particular place where what you need is, or where your buyer is, or where your seller is, okay, so that the exchange can continue. So if you look at BTC GBP, this is a pair. This pair is a market for buying and selling pound in pound sterling. That means you are using pound sterling to buy Bitcoin. That's what this pair means. So this pair, BTC GBP, indicate that if you want to buy Bitcoin, you have to pay with pound. And if you want to sell Bitcoin, you will be paid in pound. The same thing if it is BTC NGN. Okay, if it is BTC NGN, that's Nigerian Naira. It could have meant that if you want to buy Bitcoin, you have to pay with Naira. Okay, and then if you want to sell Bitcoin, then you'll be paid in Naira. That's what it means. So if I go here, if you look at this pair, BTC BUSD, this pair means that if I want to buy BTC, I will use BUSD to buy it. And if I sell BTC, I will get BUSD in return. So what you do if you want to place such trade is that you come here buy. When you're on the buy tab, right at this point, what you are saying is that you want to use BUSD to buy BTC. And then when you go to the sell tab, you are saying you want to sell BTC into BUSD. So you can simply put that any pair you have on the right, which is, it can be anything aside BUSD, is what you are using to buy BTC. And then when you come here on the sell tab, it means that you are saying, I want to sell BTC into BUSD. That means any pair, anything can be here aside BTC. You are saying, I want to sell that thing into BUSD. So you can choose different pair in the market. You can choose different pair in the market depending on what you want. And we have a lot of them right here. So you can choose any pair you want and trade with it. So that is what a market pair means. Okay, now if I go a little bit further, we have what we call types of orders. We have types of orders. We have market order, we have limit order, we have stop limit order, OCO order. So these are the most common types of orders we have in the financial market. Now, for the sake of time, we won't be going into all the types of orders, but I will take time to explain maybe 2 or 3 of them. That is market order, limit order, and stop limit order. Now, if I go right here, market order. What market order means is that a market order is an order you place to buy or sell a given cryptocurrency asset at the current market price. And it is also called instant execution order. That means that if you come here and you want to buy, let's say you want to buy Bitcoin with USDT, if you look at it, you see limit order, you see market order, and then you see stop limit, and then you see a OCO order at this point. Now, if you use market order, what you are saying, you are telling Binance, please give it to me at the current market price instantly. I don't want to wait. Give me now at the current price available. That is why if you come here, you see price and you see market. What this means is you are using the market price. And what is the market price? The market price is what you are seeing right at this point, which is a reflection of what is going on your charts. The market price is what you are seeing right here, which is a reflection of what is going on here. So what is going on here is the same thing as what is here. So when you use a market order to buy, you are telling Binance, give me at this price. It's very simple. So all you need to do, remember, it's a practical class. All you need to do is to go to buy, market, and then you put the quantity of BUSD that you want to use to buy Bitcoin. Remember, I'm using BTC BUSD pair. So I click buy here. I have 32 BUSD in my account, so I will use, let's say, 15 BUSD, which is also $15, out of this 32 to buy. So once I do, I click buy Bitcoin. It will automatically buy for me. It's automatic. So I'll click buy. You see, order have been executed. So I've already buy Bitcoin. If you see my balance here, it is now 18 BUSD. If I go here to the sell tab, you see, if you notice, my BTC balance here have increased. I have some BTC balance here before, but it has increased because I have used 15 BUSD to buy Bitcoin. Now, the same thing too, if you want to sell with market order, you are saying, sell for me right now. I don't want to wait. Sell for me right now. I'm interested in the market price, or I don't want to wait. You use the market order, which is an instant execution order. Price here, you see market, and then you can see put 15. Okay, and then sell BTC. Once you click sell Bitcoin, it will execute the order, and order been executed. If I go back here, you see my 32 is back. This is how you buy and sell Bitcoin with this pair. You use BUSD to buy Bitcoin, or you use Bitcoin and sell it back into BUSD. You can do this with any pair that you want. I used to tell people that if you have just one currency, cryptocurrency on Binance, you can convert it and get anything you want. That has the flexibility of an exchange. So that is market order. Now the next one here is limit order. Please listen attentively, because I want you to actually benefit from today's class and know how to set certain types of order to suit what you want in the market. So limit order. A limit order is an order you buy or sell a cryptocurrency asset at a specified price. That means that you are the one to specify your price. So when you come here on spot, either you click on buy or sell and you come to limit. What you are saying is that I want to fix my price. I want to specify my price. And where you have to specify that price is this point. This is where you have to put the price. So we have what we call limit buy order and limit sell order, or buy limit or sell limit. Anyone. Okay, so let's say, for example, so why are we using limit order when it comes to buying and selling of cryptocurrency on an exchange? Let's say, for example, market is at this point, but from your analysis, you believe that market is going to go down to this area. All you need to do is to set a limit order, which is a pending order at this point, so that when market come right down to this area where you predict the market is going to come into, it will automatically buy for you, even though you are not on your chart, you are not logged into Binance, or you are not set for trading for that day. It will automatically buy for you. The same thing, if you buy here and maybe you set your profit target to this point and you said, please Binance, when markets come into this area, please sell for me with the limit sell order. When markets move up to this point, it will automatically sell for you. These are the benefits of limit orders. It allows you specify your price the way you want. You can, play around with your prices. Limit buy order. Listen attentively to this statement. Limit buy order will execute at limit price or lower, while limit sell order will execute at limit price or higher. Now let me explain. What this means is this. If you go to the market and what you want to buy for something, let's say for example, you want to buy sugar, and let's say a cube of sugar is $10. Now, you set your price, that is the price you want to buy. And then at $10, that's what you want to buy. But you are saying that if market goes up to 11, I'm not interested. At that $10 is what I want to buy. But if I see $9, I won't reject it, because it is lower than your price. So you will still buy. That is what I mean by limit buy order. In this case, limit buy order will execute at limit price or lower, because at a lower price, it's still in your advantage. The same thing, if you buy something and maybe in your mind you say, I want to sell it at, let's say in the case of that sugar, $15 when it comes to sell. Now, at that $15, you are saying that if market comes to $15, sell for me. That is my price. I want it. But don't execute below $15. If it is 14, I'm not interested. If it is 14.50 cents, I'm not also interested. But if it's 16, no problem. I will accept it. It's at a higher price for me. That is what it means when we say limit sell order will execute at limit price or higher, because it is still in your advantage. So let's say in this case, if I want to buy using a limit buy order, let's say at this point, I believe market is going to come down to this area, $34,000. I will come here and put $34,000, and then I put the quantity in BUSD and it will reflect here in BTC. So I'll put 15 And the quantity in BTC will reflect if I put 15 here. And if I write anything here, the equivalent will reflect here in BUSD as well. So I will just put the price, $34,000, limit buy, sorry. I'll put here $34,000. And then I'll put 15 BUSD. And then I'll click buy. Now, once I click buy, it is a pending order. So it will go here and stay, waiting for when price will come to this point of $34,000. That is from here down. That is when it will buy for me. That means if price does not come to this point, it will not buy. And this trade remain like this. It is valid until I on my own come here and cancel it. Two things: either price come to this point and get it executed, or I cancel it on my own. That is a limit buy order. And then if I want to cancel it, I'll just click here and cancel. Once I cancel it, the money return to my balance. The same thing for a limit sell. Let's say, for example, you want to set a limit sell order. Let's say our trade eventually execute, for example, let's assume, and then it executes here, and then we set our target to be here. Market should sell for us at this point of $41,000. All you need to do is to limit sell at this point. Then you put here $41,000. Okay, $41,000, and then here I'll put 15, and then I'll click here sell Bitcoin. So once I sell Bitcoin, you see the order right here. That means this trade will execute at $41,000. So if price does not come to $41,000 here, it will not execute for me. This trade remains valid. And it will not execute at the worst price. The worst price for this is anything below $41,000. But it can execute higher than this because it is still in your advantage. It is still in your favor. That is a limit sell order. You have this flexibility to fix the price anyhow you want. So I'll come here and cancel it. So this is how you place a market buy order, market sell order, buy limit order, and sell limit order as well. It's very simple. So, one thing to tell people is that, when I was just starting up in trading, I use this as a business because if I see someone that wants to buy Bitcoin, I know how to buy. Okay, give me the money, I'll buy. I'll add little percentage, not extravagant. Maybe I'll add just little difference, just very little. And we grow from there. Okay, so only this can make you, have small money from trading, even though you're not actually buying and waiting for the market to move to the upside. All right, so that is buy limits and market order. So the next one here is stop limit order. I won't be going into OC order. I will stop at stop limit order so that we can go over to other things that we have for today. So stop limit order. Now, a stop limit order is an order you place. Listen attentively, because some persons don't understand and they don't know how to set a stop limit. When you use a buy stop limit, you want to buy at a higher price. But for sell stop limit, it is used as a stop loss. Let's say, for example, you want to buy here, or let's say you want to buy at the current market price. This is the current market price right here. But you don't know the future of the market. It is not a guarantee that market must go up. It's not 100%. Market can decide to go down against you. That does not mean that your analysis was wrong. Market just not go in your favor. And remember that in trading, losses is part of the game. You lose and you win. But for success, you must ensure that the number of times that you win must be higher than the losses you incur. So let's say, for example, you buy here. After buying, you have to set a stop limit order for sell, so that if market go down against you, it will stop you out in little loss, because you believe that at this point market may go right down, and if market go right down, it will be favorable for you to be in that kind of position. So at this point, you've cut your losses short by setting a stop limit order. Now, look at it here. So after buying, you remember you cannot set stop limit order on what you don't have. So first of all, you have to buy with either market order or limit order. Then you come immediately after buying and set a sell stop limit order. Now, under stop limit order here, we have two kinds of orders. Listen attentively. We have the stop price and the limit price. The stop price is the trigger condition that should be reached before it will then sell for you at this price. I repeat again. The stop price is the price you are saying, okay, if markets come down, it should first of all hit that price before it will then eventually sell at the limit price. It's just like the condition that should happen first before it will then sell at this price. So let's say, for example, if the condition, let's say for example, you wash your clothes in the morning and then you spread it outside to sun dry it, and then you tell the kids in the house and say, okay, if there is rain or if rain wants to fall, please take the clothes inside, just pack the clothes inside. That is a condition, if statement. But if there is no rain, leave it. Another one, the condition for bullets to come out of a firearm is that you must pull the trigger. Once the trigger is pulled, it will just go. The same thing in stop limit order. The reason why I want to take time to explain this is that if I don't explain like this, you may not understand for those of you just starting off. So the stop price is the first price. If market is coming down after buying here, it will reach that price first before it will then hit the limit price. The limit price is the price is actually selling for you and not the stop price. The limit price is the price is actually selling for you and not the stop price. So it must actually sell at the limit price once the stop price is reached. So this is how it works. So for example, you have to set a stop price, let's say from here to this point. Let's say your stop price that you're choosing is 35,500. So you said 35,500, and then the limit will now be anything below 35,500, not too far away. In Remit Trade, we advise between 2 to 5 digits, 2 to 5 figures below this. What I mean is, it will not be 35,497. This will not be your limit price. And then you put the amount. You can put the entire what you buy, or put 50% or 100%. In this case, I'll put 15, for example. And then when you set it like this, remember this 35,500 is higher than 35,497. So after this, you come here and click sell Bitcoin. A confirmation box will come up. If statement, if the last price drops to or below 35,500 BUSD and order to sell 0.00042 BTC at the price of 35,497 BUSD, we please confirm. Now, this is the price it will sell for you. This is the conditional price that must be reached. Then you now click what? Confirm. Once you click on confirm, it will place the order for you, and you see the order right there. This price is the selling price, which is the limit price. This price is the conditional price, which is the stop price. As simple as that. So when market go against you, let's say market begin to go down, it will first of all hit 35,500 first, then automatically it will sell at this price for you. Now, the reason why it will sell automatically at this price is because if this is the current market price and you are now selling below the current market price, there are buyers below that current market price ready to buy from you at this lower price, which is below the current market price. Because once the current market price drops to 35,500, it will trigger the trade to sell for you at this price, which is below the market price. So it will be instant and it will execute automatically. It's just like if you pull the trigger, you cannot bring the bullet back. It will just go like that. So that is how to set a stop loss using the stop limit order. On any exchange at all, it's not only on Binance. You can do this on any exchange, So that is how you set this kind of order right at this point. Okay, so right now I'll move over to the next slide. So you have to, there's a video I do on YouTube that talks about how to place a OCO order, which means one cancel the order. So you can take a look at that and practice on how to place this order. So I will move on because of time. So order book and trade book. So what is an order book? An order book is an electronic list of buy and sell orders for a specific security or financial assets or instruments organized by price. So it shows the number of shares bid on or offered at each price point. Now, when an order gets executed, there's a difference between when you place an order and when an order gets executed. It's two different things. Now, let me show you. You see this order? This stop limit order I placed. I've placed the order, but it has not executed. When you execute the order is when you actually perform the transaction successfully. That is when this market comes down and hit this price and get this thing filled up. You see feed here, 0.00%. That is when we say an order is executed. But now I just place the order. That's the difference. So an order book, see it here, an order book is an electronic list of buy and sell orders. The red side here are sellers, while these guys here are buyers. You see green, on all exchange you see green. They represent buyers. All here are sellers. The red side here are sellers. Now look at it here. If you look from here, from bottom here, where you see my cursor, up, price increase, because people will always want to sell at higher prices. That's why we say an order book is an electronic list of buy and sell orders organized by price. Organized by price. So if you look at this one, these are buy side. From here down, price decrease. And they are organized by price. That also means that if you want to buy and you place a limit order, it will go into the order book and stay waiting for when price will come down to the level. If you want to buy and you place a limit, a stop limit or an OCO order, these are pending orders. It will come here and stay for buy. The same thing for sell. If you place limit, stop limit or sell OCO, it will come to the sell tab here, this sell side. And wait, because it's a pending order now. When you place a market order, it does not go into the order book. Reason why? It is an instant execution. It is an instant execution. You know, there is this controversy, like, especially baby traders, they don't know that when they place a market order, it does not go into the order book and stay. Because it is instant. You are telling your exchange, please sell for me here or buy for me at this price. That is why on so many exchanges, you will see this could have been bid. This would have been bid. And these are offers. These are bid. These are offers. Now, on other exchanges too, you will see taker fee and maker fee. Some person don't understand. Let me explain. Taker fee and maker fee. This training is supposed to last for 1 hour 30 minutes, and I am actually looking at time. So very soon you're going to close, but I want you to get everything step by step. So stay with me to the end. So when we mean by taker fee and maker fee, if you are placing a market order, be it buy or sell, you are a taker. Reason why? You are taking liquidity out of the market. You are taking liquidity out of the market if you use a market order, either buy or sell. But when you use a limit order or a stop limit order or an OCO order, either buy or sell, you are making liquidity. You are making liquidity in the market. So we call them makers, market makers. While people that use market order, we call them market takers. So on some exchange, you see market maker or taker fee, maker fee. You have to understand what that means. So when your trade executes, when your trade execute, let's say you place a limit buy order and your trade executes, it goes into what we call the trade book. See the trade book right here. It's a combination of green and red. So when your trade executes, it goes right here as a trade that has been executed. This thing you are seeing here are trades that have not been executed but placed. These are trades that have not been executed but placed. These are trades that have been placed and it has executed, so it reflects in the trade book. One of the things we do in Remit Trade Academy is that we explain in detail. The reason being that we know what we are doing. We know what we are doing, so we have the capacity to explain in detail for you to understand. So that is what order book and trade book mean. How to deposit and withdraw on an exchange. Now, first of all, how can you deposit? Now, for those of us in Nigeria, the only way you can deposit is using P2P on Binance. And I have a video right here on Remit Trade channel. Like I said, if you've not subscribed, please do it to subscribe. I have a video here that talks about how to trade on P2P using mobile phone or your computer. So check that out and learn how to trade on P2P. And then if you're not in Nigeria and you're in another country, then you can use your credit card. You can find that out on Binance, where you can use your credit cards, okay, to buy crypto. For those of us in Nigeria and some part of Africa, it's P2P trading that you have to use to deposit. And there are simple rules and guidelines that you have to follow for you to trade on P2P. Please don't trade on P2P when you don't know the rules that apply. Like I said earlier, I have a video here on the channel. Please check that out and watch the video, both for mobile phone and for when you want to trade on your PC or your laptop. Okay, so that is the number one way to which you can, deposit on Binance. The other one is if you know someone that, let's say myself, and you are a member of the academy, you can say, okay, Mr. Paradise, please, I want to buy so and so coin. Okay, let me send you Naira and you give me this. So I'll speak, okay, I want to say at this price, and you send me Naira and I credit your account. That is direct deposit. And then please, when you are depositing, what we call network, you have to choose the appropriate network when you are depositing, even when you are withdrawing. Okay, so if I come to Binance here, if you want to deposit and withdraw, you go to this area, deposit and withdraw. So if I go to deposit and withdraw, let me show you something. Deposit and withdraw right here. So if it is, let's say you want to deposit, I'll click on deposit, for example. You see, deposit crypto or crypto deposit, fiat deposit, I will say crypto, okay? I'll click on crypto. Now it will tell me choose the crypto I want to deposit. Let's say, for example, I want to deposit USDT. Now it will tell me choose the network. I will say I want to deposit with BEP20, BEP20. Now, once I choose this, first the coin, second the network, it will automatically bring the address for me. Now, this is the address you will copy and send to the person. Remember, when you are sending this to the person, you have to indicate that this address is USDT address and it supports BEP20, BEP20 network. Because if you don't specify it like that, the person can use any of the network here and send it to you from his own end or our own end. And once the person uses a network that is not this BEP20 or BP20, you've lost the coin forever. Yes, for now, there is no mechanism for you to recover. I don't know, maybe as we advance in the space, there may be a technology that will help you recover those kind of stuff. But for now, remember that cryptocurrency transactions are irreversible. That means when you send a coin, you've sent it. So if you use the wrong network to send a coin to someone that does not align with the address, you lost the coin. So in this case, if you want to deposit USDT, let's say you want me to credit your account, what we do is you go to WhatsApp or maybe via mail or anywhere, you type USDT, USDT, which is the coin. You indicate that this is BEP20 and you give me the address. So the coin, the network, and the address. These three things are what you need for perfect deposits and withdrawal. Perfect deposit and withdrawal. Now, there are complications on this when you go to wallets like MetaMask, Trust Wallet, and other kind of wallet, let's say Exodus, Eden wallets, and Electrum. Now, these wallets, most of them do not specify whether the coin therein supports maybe BP20 or ERC20 or Solana Network or TRC20. They will not specify. So it is your job to identify the network that it supports. Now, this is where we come in. For all our students, you don't need to worry about that. Chat us up or chat any of the admin in the group for them to help you identify the network. Because if you go to Trust Wallet, you see coins that network are not specified, but they are running on the network. So please don't make mistake of sending a coin with the wrong network. You will make it will make you lose your coin forever. So don't make that mistake. So this is how you deposit. You can just type this, copy this, don't write this. Copy it and send it to the person via WhatsApp, mail, or any medium. Okay? So once you do this, the coin will land in your account. So what the person will do from his or our own end is that the person will go to withdraw, choose USDT, choose BP20 network, copy this address that you sent to him and paste in the column and then put the quantity of USDT, maybe 100 or 200 depending on what people bargain, and then he will send it to you or she will send it to you. That's all. That is how you deposit and withdraw in cryptocurrency. There is this common thing that how can you get it in Naira? Or how can you get it in your local currency? The number one way you can get in your local currency is either you go to Binance P2P and trade it for Naira, where they will deposit in your direct bank account, your local account, or you know any trusted person that do buy and sell. The same thing, you can send it to the person and the person will credit you. Now, Remit have an escrow group. We have escrow. You see, Remit Escrow Exchange, Remit Escrow. We have like 4 of them. We also have others. And then you can come here, since it is being monitored and controlled by us, and perform your transaction here. And you see buyers and sellers. That's one way. Now, another one is that you can go to any other exchange that is not Binance and use a P2P platform like Remit, like local BTC. And then one good news is that Remit is bringing up her exchange very soon, where you can do P2P on and do a lot of transactions like buy paper, perfect money, use your Naira to buy perfect money, all of those stuff. So it's a platform that will interact within different layer solutions and mitigate the challenge between the first layer payment method, second layer payment method, and the third layer payment method, which is cryptocurrency. To mitigate that challenge, we are bringing an exchange very, very soon, and the developers are doing some great job. So this is how you will deposit and withdraw on an exchange, any exchange at all. So types of analysis. Let's go into a little bit of analysis for today. Types of analysis. Now, having know how to buy and sell, having know how to go about you buying and selling, it's very important that you also know how to do simple analysis. It's very important that you know how to do simple analysis. And that is what we're going to go into right now, so that you know how to do simple analysis on your chart. So let's say, for example, if you come right here, before you place a trade, listen attentively. Before you place a trade to buy and sell, please do your analysis. And that is why Remit is here. Remit Trade Academy is here to help you, teach you, guide you on how to go with simple technical analysis or simple fundamental analysis so that you know how to buy first, how to buy goes with this. When to buy goes with analyzing your chart and knowing the right time for you to actually place or trigger your trade. And that deals with reading your candlestick chart, applying your tool, and maybe using your technical indicators. A lot of things is involved in that. All right, so in that regard, we have types of analysis and charts. We have technical analysis and fundamental analysis. Now, when we talk about technical analysis, it's the use of historical price action. That's technical. Technical analysis is the use of historical price action, charts, patterns that emerge to predict market direction. If I put this on full screen, so when we talk about technical analysis, we are saying that you use what price have done before, okay, to predict what price is going to do next. Use what price have done before, just like here, to predict what price is going to do next. That is technical analysis. When you do this, you are doing technical analysis. Now, fundamentals deals with looking at news about a coin, number one, what a coin is used for, that's the use case. You look at the white paper. You look at so many other stuff aside looking at charts. Anything you do that does not demand you looking at charts for you to predict market price or market direction is called fundamental analysis. Fundamental analysis. So when you do any of this, you are actually looking for a way to know the right time to buy so that market will move up in your favor and you sell at a higher price and collect profits. All right, so let's move a little bit further into technical analysis. Now, technical analysis comprises of three main things. Three main things. Number one is your charts, your candlestick charts. This you're seeing here, your candlestick chart. That's technical analysis. This with this. Secondly, your tools. You have a lot of tools here. I can't go into talking about each of these tools, but these are tools that will help you do your technicals very well. If you watch my video on YouTube, you know, we use most of these tools often, and you have to use them as well as a trader or technical analyst. Then the third thing is your technical indicators. Your technical indicators, see them here. We have numerous technical indicators. A technical indicator is an application, a software that helps you predict market direction. That's what it does. So these are the three things you need for your technicals. Now let's say, for example, these are time frames. What this time frame means is that, you see 4 hours. This means that each of these candles are formed in 4 hours. You see, this one just closed and this one open. This just closed right now and this one just open right here. So it means that each of these candles are formed in 4 hours. So they expire at the end of every 4 hours. The same thing, if you put it on 1 day charts, it will give you a different chart formation. This means that each of these candles is formed in 1 day, that's 24 hours. That's what time frame means. So we have different time frames that you can use in the market. Now, let's go into what candlestick is. Now, before now, traders are using what we'll call line charts. We have three main types of charts. We have line charts, we have bar charts, and we have candlestick charts. So if you go right here, you see line charts. Line chart does not give you information about price. It doesn't give you enough information about price. That means you have this tendency to lose much when you are using your line chart because you can't actually read this. After the line chart, there was an introduction of what we call the bar chart. The bar chart gives you quite well information, but it is not enough. Then there was an introduction of what we call the candlestick chart. And the candlestick chart here, we can have the hollow candle or this kind of candle. So the candlestick chart was introduced by the Japanese rice trader, and it was used to track the price of rice in the 90s. That's in the 19th century. So they used it to track the price of rice as a commodity. That is what candlestick chart is. And that is where it comes from. So you see Japanese candlestick. It was first of all used and developed by the Japanese trader. So that is why it's called that. Now, if you look at a candlestick is of two types. Bullish candle or bearish candle. These candles that are green are bullish candle. These ones that are red are bearish candle now. Note that candlestick can be color coded. You can color code your candles. That means you can turn this green one to blue. You can turn this red one to black. It doesn't mean. But there is something that differentiates between a bullish candle and a bearish candle. And that thing is where they open and where they close. Now, taking a look at a typical candlestick right at this point. This candle open here and close here. Immediately this one close, this one open here. Go market move up and close at this point. Immediately this one close, this one open here and close at this point. Okay, so right here you see markets open, close, just like that. So when market open lower and close higher, is called a bullish candle. If you look at this, market open here, market close on this one, open here, this one close down, this one open here, close down, this one open here, close down. So when a candlestick open higher and close lower, is called a bearish candle. The color is not the real thing to use in the identification. The color only help you very fast. So the question is, if I color code all these things as red, will you be able to identify your bullish candle and your bearish candle? Yes, by using opening and closing prices. This is how we teach here in Remit. Teaching in detail is the most important thing for you to understand and apply what you are learning. So that is candlestick. Now, if you look at this, a typical candlestick have wick. From here to this point, you see this thing called wick. This is the upper wick. This is the lower wick. It's also called shadow. So we call this lower shadow or upper shadow right here. From the opening to the close is the real body of the candle. So we have the open, we have the close, we have the upper wick, we have the lower wick, we have the lowest point that price get to and the highest point that price get to. These are candlestick infrastructure that you need to understand so that it will aid you know how to read your market properly. It will aid you help how to read your market properly. All right, now let's move a little bit further into technical indicators. Now, I don't want to go into all this stuff of resistance, support, market structure, all the stuff. It requires intensive trading for you to actually go into that. But technical indicators, we have several types of indicators. For example, we have stochastic, we have MACD, which means moving average, convergence, divergence. We have the Bollinger Band, we have the SMA, EMA, which is simple moving average, and exponential moving average. We also have here the parabolic SAR, and a lot of them. If you go right here to this point, we have technical indicators. See, we have numerous of them. At this point, numerous of them. All you need to do is to know how to use them, and then that's all. So let's look at this first one, which is stochastic. Now, how to use a stochastic with a simple trading strategy for trading? Because for you to place a trade, you must do your analysis and ensure your analysis is on the right track. So all you need to do when you come here is to first of all come here and then search for stochastic. When you click for click on it to come up. Now, for now, don't change any parameter. If you go here to settings, you see input, don't change any parameter until you are good. Until you can change parameters to suit what you want. So you go to style, and then for visibility, I will increase all this. Now I think it's very visible. So right now, the stochastic here is an indicator that shows where momentum, listen attentively, where momentum is heading to in the market. That also means that it shows you where momentum is dropping down in the market. So we can simply put that stochastic oscillator or stochastic indicator is a momentum indicator. So it shows you when momentum is going up, when momentum is coming down. Now, the stochastic have two major areas: the overbought territory or the overbought condition, and oversold territory or oversold condition. From here, from this point up, is overbought condition. Let me increase a little bit. From this point, 80%, this line, this dotted line, which is 80 here, up is overbought condition or overbought territory. Then from this area down, that's 20, this line, this dotted line, white line, down is oversold condition or oversold territory. If you look at it, when markets come into oversold, now before I go into that, this blue line and the red line are moving averages. The blue line is a faster period moving average. That means it reacts to the market more faster. While the red line is a longer period moving average. That means it does not react to the market very fast. When the blue line and the red line move into this overbought region or overbought territory, it means that market will soon go down, either immediately or soon. If you look at here, market move, when market come into oversold, it means that market will soon go up, either immediately or soon. So if you look at here, market come down from this point into this area, then after some time, we see price come down a little bit and go up. You see, market was at overbought here. Market come back down. Enter into oversold again. Market go up. See, this point is at overbought again. Just like that. So it shows you overbought and oversold condition. Like I said earlier, when market is at overbought, that is when the blue line and the red line is in the overbought region or territory. It means that market will soon come back down. That means sellers are going to take control of the market either immediately or soon. Then, when markets enter into oversold condition or territory, it means that buyers are going to move the market up either immediately or soon. That means that sellers are tired at the moment because they've been buying, they've been selling, and they've oversell. That's what we call oversold. Now, so what do you do when you are trading on spots? It's very simple. It's a simple strategy. All you need to do is that, first of all, you identify the market direction, which we do not talk about, which is what we call market structure. You identify the market direction, market is going up. Once you identify that the market is going up, then wait for the market to enter into oversold condition. Coming out of the oversold condition with the blue line on top of the red line is when you are buying. That is the strategy. Okay, let me go right here. Let me reduce it a little bit. Okay, then let me move over to this area where I have a smooth uptrend. Okay, so in this area we have an uptrend here. So this is an uptrend, clear uptrend. So that's the first thing you have to do. You have to identify your trend, your market trend, where market is moving to at that particular time using a specific time frame. In this case, you see market go down. Market was in a downtrend, but market start moving up from this area, and then from this area we see market breakout. After this consolidation, market break out here and continue moving up. If you look at it, market touch this region, this oversold condition. Now, what you do is that market must not necessarily come into this region. That means the red line, the blue line must not enter inside before you can place your trade. If market just comes slightly and just touch this area or enter into this area, wait for a buy. After a crossover, that is the blue line or the red line, you can then enter your trade. So in this case, this is where you're entering. This is where you enter your trade. This is the entry strategy. It can be any candlestick pattern, can be bullish engulfing or bullish harami. You can be looking for a hammer or a morning star candle at support, move up. Any candlestick pattern you can identify, no problem. Or you use a chart pattern as well to identify when to actually trigger. But in line with the stochastic, a stochastic now is serving as a confirmation for you to trigger the trade. So when you eventually buy, after you see this, maybe touch the oversold condition or enter into it and come out with the blue line on top of the red line, just like in this area, then you are placing your trade. That's the entry strategy. Listen attentively. This is the entry strategy. The exit is when markets start to move up, you have to wait for the blue line enter into the overbought condition. Not that they enter into the overbought condition, you just exit. No. You will wait until you see two significant candle, number one, or you see a candle spike. Two things that you're looking out for to exit. Either you see two significant candles moving down. See, after the breakout, where we see two significant candles move down is this area. This is where you exit the trade. Because you believe that market is going to do what? Go down. Now, at that point of two significant candles, the red line will not be on the blue line moving down. That's moving out of the 80% mark, coming down. That is when you do what? You exit and collect the profit you made from here to this point. That is the take profit strategy under this stochastic trading strategy. Now, the stop loss. For you to set a stop loss, you can use, maybe if you are familiar with stop loss placement and how to set stop loss without experiencing stop loss hunts, you can use your support resistance. But if you're not familiar with your support resistance, you can use your ATR. Your ATR indicator is what you can use to get this. And I think I have a video that talks about ATR indicator right on the channel. So that's your exit strategy. So once you use your ATR to do your ATR calculation, you get your stop loss maybe possibly somewhere here. So let's say, for example, this is your buy position, and then this is your stop loss, and then this is your exit. You're exiting here. Your entry, your stop loss, and your target. Once you get this, first thing is your entry. You go back here. Once the strategy obeys and place your trade at this point, come back and use either stop limit sell or you use OCO order that help you place a stop loss and you take profit at the same time after you've bought the coin and place that order right at this point. Now, if you look at this strategy, you discover it works very well, especially when you understand how the market works with momentum trading. It works perfectly, not 100%, but it has some degree of accuracy. If you look at it, if you place a trade here, this another opportunity to buy is this point. You buy here because the stochastic enter into or touch this oversold, go up again. Another point you will place a trade again is this point. Market move up. You're only placing a trade when the stochastic enter into oversold condition. Coming out of it with the blue line on top of the red line. That is only when you are doing what? That's only when you are placing a buy. This strategy can help you make a good sum of money using the stochastic. So I will go into question and answer, but before I go into question and answer right now, for give you room for others, I can see a lot of chat in the chat box, but I want to tell you a little about Remit Trade Academy and what we do. So we have what we do at Remit Trade. We have what we call the Remit Trade services, and we have under Remit Trade Academy we have cryptocurrency course, we have forex trading course and stock trading course, and then the Remit Exchange is loading very, very fast. Now, for cryptocurrency course, you can take beginner course, advanced course, and crypto investing course. Now, these courses are very, very powerful. It has curriculum and will take you step by step, gradually to the end, from the scratch of what cryptocurrency is to the very advanced level. And not only that, we're not going to leave you for you to just go and swim in the space. We'll guide you step by step and also guide you to profit. So we have a lot of stuff. We have the advanced group, which you will be. This is where the community is. We can train you in beginner, but for you to enter the advanced group, you have to take both courses to enter into the advanced group. So this is Remit Trade course, and they are very, very affordable, and you can get it at a very, very cool rate. Now, for the purpose of this training, we have reduced the price of our courses on discount right now, and this discount ends on the 5th of next month, February. So for the beginner course, you can get it at 15,000 naira for those of us in Nigeria, and then for advanced 35. Now both courses, mentorship, access to VIP signal group is 50,000 naira, and this discount ends on the 5th of February 2022 this year. So these are the courses and the price, and then we have curriculum that we take you through. So if I go back to this area, I want to show you the curriculum right now, so that you know that we take people based on curriculum. So if I go right here, so let's allow this to synchronize. I'll come back to showing you the curriculum later, but know that we have curriculum, and we also post the curriculum in the WhatsApp group. And if you want the curriculum as well, you can as well request for the curriculum. So this is Remit Trade Services, and this is a cryptocurrency course. The same thing for forex. We have beginner course, advanced, and investing course as well. And also we have our social handles, so you can join us on our social handle. Number one here is Remit Trade channel, which is this very channel right here. Please ensure you subscribe, turn the notification bell, and always leave a like for our video. Always also leave a comment for our video and ask your question where necessary. And then you can also follow us on Facebook, Remit CFT, or Facebook page, and also on Instagram, and also on Twitter, Remit Trade as well. So you can follow us on any or all of these are social handles. And then before we go into question and answer, we have our office located in Rivers State, Nigeria, specifically in Port Harcourt. So this is the trading hub, Remit Trade Academy trading hub. So you can come here and learn cryptocurrency and other financial markets profitably, soundly from Remit Trade Academy. So be it you need physical training or you need online training, anyone you need one-on-one mentorship or one-on-one training, group training, we have other services here in Remit Trade. So you can take anyone you like. Now we are starting a fresh beginner course. A fresh beginner course is starting on Friday, on the 15th or the 5th, sorry, on the 5th of February, which is on Saturday next week. When the discount is ending, we are starting a fresh beginner course. So you can take this course and roll with us. And then if you are watching on YouTube, the same thing, and the courses always continue like that. So now let me give room for question and answer. So this is the trading hub, and then this is myself taking the class. So you can always get in touch with us if you want to really know how to trade cryptocurrency very, very well. And then for your information, all payments are made to the company's account, and you have to send us a screenshot of payments for you to be confirmed and you get into class. Okay, so that is that for this. So right now is question and answer section, so that I'll take this question and answer section in the next 20-25 minutes, so that we'll end the class. All right, so for question and answer, you just kindly unmute yourself and ask your question. All right, so you can ask your question now. You can unmute yourself and ask your question.
Hi, Paradise. Thank you for this great opportunity. So my question is how to do a trailing stop loss. Because I tried it and it never execute. I don't know why.
Okay, a trading stop. We are not going to that for today. I can't answer that question, but practically. But I have a video. I don't know where you learn it from, But I have a video on this channel that talks about trailing stop, how to set a trailing stop. And then trailing stop only applies on Binance for futures. If you go right here to the futures platform, that's only when you see trailing stop, where you set a stop loss. Set a stop loss in such a way that when market is going up, the stop will be moving with it. That's a trailing stop. It traces your profits, and then at some point, if market reverse, this stop loss that was moving in line with it will not go down. It will wait. So if market hit it, it will collect the profit for you, and that's all. So a trailing stop is a stop. It's a stop loss you place to trail your profits. It trails your profits and protects you from, maybe your stop loss is here if you use normal stop limit order, and market move up can come back down and make you be at a loss. But for trailing stop, it will trail it. If market move up to this point, it can be trailing it, and it will be maybe somewhere depending on your setting. And then if market turn back down, it will not go down again. It will remain here, and it will hit it here, and then it will collect the little profit you made from this point to where you enter. That's a trailing stop. So two most important thing about trailing stop is that it have what we call the callback rate and the percentage in which you are using. So you can go here on the channel, check that video how to set trailing stop order, or if you are in the WhatsApp group, request it right there, and we are going to open it for you to get access to that video, or you can contact Remit line, and the link to this video, the trailing stop video, will be sent to you directly so that you get it right there. Any other question?
Thank you. No.
All right, next person please. Any other question? Any person have any other question?
Good evening, Mr. Paradise.
Yeah, evening. Thank you.
I'm happy for this such training. Sir, I'm a crypto trader as well.
Okay, great.
But just only thing I've not understood clearly is that technical analysis.
Okay.
So other basic trading or other thing knowledge I have it already, but only technical analysis I want to know better.
Okay. You know what?
But what you said now,
okay,
is this if I want to register for that just technical analysis or advanced course?
Yeah, you can register. Yeah, you can register for only advanced course. That's 35,000 naira.
Only advanced course.
Yeah.
Okay. And that will be how much you call it, sir?
That's 35,000 naira at discount.
5,000. If I want to register for from the beginning to advanced course, that would be 50,000 naira, right?
Definitely.
If I get it right.
Definitely.
Okay, I'm happy. I will try to practice it.
All right. Now, one thing you have to understand is this.
Okay.
See, when it comes to technical analysis, there is a guide. There is a step-by-step guide that you need to follow for you to understand. Because first of all, what we do here is to lay that foundation from the beginner course. So some person take the advanced course and leave the beginner course, but the beginner course is the real foundation where these things are laid, where these things are built upon. So the beginner course gives you that foundation in technical analysis. Why advanced course are logical, critical, technical analysis. You get it now? So they are all technical analysis. So what you need to do to solve that problem of yours is enroll for our course, and I give you a guarantee you will know how to do simple technical analysis or logical technical analysis and be profitable in the market.
Thank you so much.
All right. You're welcome. Next question. Next question. Yeah. Next question. Any other question?
Hello.
Yeah, I can hear you. Go ahead. Yes. Unmute yourself and.
Okay. Hello.
Yeah, I can hear you now. Go ahead. Yeah.
Okay. Yeah, I have a lot of questions to ask, but I wouldn't want to bother us with too much questions, because I just want to thank you for your service, Mr. Paradise.
You're welcome. Thank you very much.
You've done a great job. I just want to thank you for your service. I've been following your channels a lot. I follow your updates.
Thank you
Most of
so
your
much.
updates are along the line. Most of your updates are along the line. So thank you very much, sir. Thank you very much. We really appreciate it.
You're welcome. All right. The next person question. You have question before we end tonight class. I can hear you. Go ahead. Yes. Any other question? Any question before we end tonight class? So ensure you start practicing. Register with the link in the description of the video or the link in the WhatsApp group or Telegram group anywhere. Verify your accounts and start trading. Next question. You can ask your question.
Hello, can you hear me?
I can hear you. Yeah.
Oh, thank you for the lecture.
You're welcome.
Thank you.
You are fine. Hello?
I can hear you. Go ahead. Yes. Go ahead.
All right, okay. My question is, I've been trying to verify my account. That's my Binance account, and I've not been able to do so for some time now. I don't know if I can still go ahead with the training without my account being verified.
Yeah, you can go ahead with the trading, but you cannot place a trade. Now, what's the issue about your account not being verified?
Each time I do facial verification, they tell me it's fake.
Okay, this
So,
this what you will do. This is what you will do. It will go through. If it is only facial verification error, please ensure you do that in the day, maybe where there is maybe sun, where sun is shining brightness, or you do it where there is enough light, enough lightning. Now, when you do the facial verification, if you follow the what is being written on the screen, where they will tell you move your face to the left, right, or inside of it backward, they will tell you to shift your head or move your eye, all those kind of stuff. Follow that instruction. If you follow that instruction very well, then you should be captured and your account should be verified.
Hello, good
Yes,
evening,
your
sir.
account should be verified.
Okay.
Good evening,
Thank
sir.
you.
All right, you're welcome. Yeah, good evening. Thank you. Go ahead.
Thank you for the class. Really appreciate it, sir.
You're welcome. Thank you.
Thank you so much. Please, my question is that about the verification about the Binance. I've tried this. Let me just say this is the 6 months now. I've been trying it. I've been trying it. Mine normally I've tried in the midnight. Still was still giving the same issue, not the verification.
What was the issue? What's the issue?
They are just rejecting the national because I'm using national ID card.
Is it the NIN slip?
Yeah.
No, it won't go through. What you do is that chat up Remit line.
Okay.
And request for the process for getting a NIN card. A plastic NIN card. We will give you that process. We will just WhatsApp the Remit contact. Then the NIN card the process will be given to you so that you do it. Once you do it, get it, that's about 1,200 or 1,500 naira. So you get a NIN card. So you use that NIN card. I mean plastic card, not slip, not that laminated stuff. You can use that NIN card to verify your account. Yes. You can verify your account with that. Yeah.
Okay. My second question is that what is the difference between exchange and wallet? Because someone told me that like in exchange you cannot put our money in like keeping or something. In wallet our money cannot be like if I buy a BTC now. If I buy a BTC now, we have BTC of worth of $100. Like in wallet, you cannot able to like rise if I just leave it. They are in just wallet or small.
Now the main difference between
I need more.
Go ahead. Go with the question.
Yes, I'm hearing you. I just need more understanding on that exchange and wallet because when I want to use someone to me trust wallet, you cannot use it for exchange. But I was confused.
Okay. Now this is it. An exchange is where you buy and sell, just like you see this. It's an exchange. You see buyers and sellers right here, Abi? So you buy and sell. Now a wallet is a place where you store your coin. So a wallet is like your bank account where you save your money or store your money.
Yeah.
Now recently on an exchange, on a wallet, you can swap one coin for another, but it's not common with all wallets. I get in that you can swap from one coin, but you'll be limited to a certain number of coins. But on an exchange, you can exchange to varieties of coins. Now, it is not always advisable you leave your coin on an exchange because an exchange is a business. Okay, so they can fold up, they can be liquidated, and they will fold up and they will win the way you are with your money if they don't have insurance that cover them or back them up. But a wallet will not do that. A wallet is like your purse where you save your money. That's a wallet. A wallet is like your purse. So when a coin is in your wallet, if coin is increasing, if that coin is increasing on an exchange, it will reflect in your wallet, it will increase. Are you getting it now? Not that if you save money there or crypto there, it will not increase. It will still increase as that coin is increasing on the exchange.
Okay.
Yeah.
Okay. Thank you so much. Thank you so much.
You're welcome.
But sorry again. My last question is that nowadays I'm hearing about NFT.
Okay.
Like NFT, but I don't even to understand it. I'm just saying NFT. But I need your
NFT means I think I will release a video on NFT next week Saturday. So you watch that video as well.
Okay, I'll be really happy about
now,
that. Thank you so much.
NFT means non-fungible tokens. Non-fungible tokens.
Okay.
When we mean that not something is non-fungible, it means that if 1 naira, 1 naira is equal to $578. This is fungible because we can quantify the quantity of naira we can use to buy $1. This is fungible. It's quantified. Now, one non-fungible token means that this thing, it cannot be quantified. Okay, so those things that cannot be quantified can be grouped into artwork, collectibles, music. There's no way you can quantify a particular music. Different person will have their prices. Say, I want to sell my track for so and so price, or I want to sell this artwork for this price. You cannot quantify it and make it level for everyone to pay the same quantity for this very particular value. So that is where fungible and non-fungible tokens come about. So fungible tokens are USD, BUSD, BTC. All these coins are fungible tokens. Non-fungible tokens are collectibles, artworks, paints, pictures, music tracks, and all of those video games. So these are non-fungible tokens. But I will go deep into that on the video I will release on Saturday next week. Any other question?
Okay. Thank you so much. I really appreciate that.
All right, thank you. Any other question? Any other question? So before we'll close for tonight, there's what we call Remit Trade Class 2021. Remit Trade Class 21. Remit Trade Class 21. You see it here? This is the last batch that they are doing their training right now. This is about 30-something students that is in this very section. The next batch have started already, which is Remit Trade Class 22. And that is where you guys will fall on that right now. People have started and joining as well. So all you need to do right now is to enroll for the course and learn how to trade cryptocurrency perfectly. This course continue Remit Trade Class 22. We have Remit Trade Class 23 just like that. So ensure you learn how to trade cryptocurrency very well on your own, from your own, independently, even though you are in Remit Trade community. So thank you very much for coming to this class. Those of you watching on YouTube, thank you very much also for watching the video, and thank you also for your questions, and I will be willing to see you in the Remit Trade community. Thank you very much, and have a nice weekend ahead. Thank you very, very much. And then if you've not subscribed to this channel, please help subscribe, hit that like button, and don't forget to turn on the notification bell so that when we upload the videos every day, you get notified and receive updates on market analysis and what to do in the market and also what to expect. And then if you have not registered on Binance, OKX, and Bybit, all those exchanges, link in the description. Do your registration right away. Thank you very much for being today's class, and thank you for watching as well. So I will see you in the next training section and also in the various Remit platform. Thank you.